Hello guys, welcome back to RALLYTOP Investing and welcome back to another very wonderful moment with us. Now in today's episode, we want to look at smart money concept price cycle. Now, this is a very powerful conference if you actually want to make consistent profit in the market. You need to understand the cycle of the market. This repeats itself day in and day out. Now, what do we mean by price cycle? Now, take a look at this diagram. Now, price cycle has 4 phases. The number 1 phase is the consolidation phase, and this shaded area is that consolidation phase. And we know as traders that the Asian range or the Asian session is characterized by consolidation. So anytime you find a consolidation like this in the market, it is time for you to get prepared to kill the market. Okay? The longer the consolidation, the greater or bigger the move. So every time I find a consolidation in the market, I get myself prepared because I know it is time to really make a huge kill of the market. Now, that is phase number 1, consolidation. All right, consolidation is not something that should scare you. It is something that should prepare you for a greater kill in the market. All right, now, what do we mean by consolidation phase? Well, consolidation means that market is trapped in a range. Buyers and sellers are in equilibrium. That is, they are balanced. All right? 50 buyers here, 50 buyers here, balanced. 50 sellers here, 50 buyers here, 50 sellers here, balanced. All right? Once you have that 50-50, 50 buyers here, 50 sellers here, you have a consolidation. Okay? So, essentially, what we mean is this. Consolidation phase is when the buyers and sellers are equal. As simple as that. Now, after the consolidation phase is the expansion phase. Now, the expansion phase is when price moves out of the range with displacement, leaving behind fair value gap. What do I mean by moving out of the range with displacement? I'm talking about this range here. When price moves out of this very consolidation phase, all right, it has to happen with displacement. What I mean by displacement is high volume of price, high volume of the market. All right, you want to see huge candles leaving this consolidation phase. That will tell you that the smart money is involved. All right? And then after the expansion phase, remember the expansion phase will leave behind fair value gaps and also internal liquidity. Okay? Now, phase number 3 is retracement. Retracement is when price goes back up to fill in the gaps, the fair value gaps created by the expansion phase, and absorb internal liquidity created by the expansion phase. Now, the last stage, which is stage number 4, is reversal. Reversal is when price now makes a complete U-turn. All right? In order to grab external liquidity. Remember, your external liquidity is here. Okay? Remember, I talked about internal liquidity, absorbing internal liquidity here in the expansion phase. But in the retracement phase, price is moving to go and grab external liquidity. All right? This is very crucial for you to understand. Very, very important. Because day in, day out, this is the way the market moves. All right? This is the way it moves. So when price is retracing, it is that retracement phase that we will seek opportunity to be involved in the market. Because more often than not, when price retraces back into the range that was created, they usually, I said, in the expansion phase, that it will leave behind some fair value gap. So price is going to fill in any fair value gaps that was created by the expansion phase. And that is where we as retail traders seek to take opportunity to move with the price downward to take out the external liquidity. Okay, so much about that. Let me quickly show you some examples on the charts so that you'll be able to understand what we mean. Now, first of all, let me say this, that you need to pay attention to your market structure. All right, pay attention to your market structure, pay attention to your inducement. All right, and then the consolidation phase is just an added confluence to give you that extra confidence that the setup you are about to take or the trade you are about to take will go in your favor, most probably. All right, so I want you to understand that. So in this case, let's look at the market, the structure of the market here. Let's just look at what is happening here. All right, as you can see, price was bullish, as you can see here. All right, price was bullish. This is where is it? This is lower, higher low. This one is higher low. Okay, let's start with the higher high. This is higher high. Why is it higher high? All right, it is higher high because it has taken out inducement. Remember, I told you a high, a new high, a higher high, or a lower low cannot be formed until inducement is taken. And where is the inducement in this case? Look at your inducement here. Very simple. This is your inducement. And price has already taken that inducement to confirm the high as a valid high. And remember, this low cannot be confirmed just yet until it takes out inducement. And that, until it takes out the major structure high, which is your boss, that's your break of structure. Once that break of structure is confirmed, then your higher low is confirmed. Do you understand that? This your higher low is confirmed as a valid higher low. Okay, so now just a minute. So it's confirmed as a valid higher low. And now, after your higher low has been confirmed, you now look for this high. Can this high be confirmed? Well, the high is confirmed when it takes out inducement. And where is the inducement in this case? This is your inducement, guys. It has to take out inducement. Without inducement being taken, your high or low cannot be confirmed. So inducement is taken there, confirming this high as a valid high. Okay, so this is your high, valid. That's your valid high. Okay, and then price came back down. Remember, this is the last higher low before this higher high. I hope you understand that. This is your last higher low. This one is your last higher low before this higher high, and price now came down. If price takes it out with a candle closure, it means price has changed direction. As you can see, initially it took it out with a candle wick. This is not our change of character, all right? Because it's with a candle wick, but eventually it closed below it, confirming this as our change of character. As simple as that, guys. You don't need to overcomplicate issues. So that's our change of character, and therefore we are now bearish. Okay, now that we are bearish, now can this low be confirmed as a lower low? Well, it can only be confirmed as a lower low if it takes out inducement. Okay, if it takes out inducement, and look at it, inducement has already been grabbed here. Let's see, inducement has been taken right here. Okay, so your inducement is taken, confirming this low as a valid low. This is your valid low in the market. Okay, That's your low. Now, after that low, what happened again? Price went up. This high cannot be confirmed as a lower high until price takes out this major structure low with a candle closure. And as you can see, that happened somewhere here. Take a look. It took it out with candle closure. Is it? Let's see. So as you can see, it took it out with candle closure, even though initially didn't, but eventually took it out. Okay? And therefore, this now becomes our break of structure. So we are now in a bearish structure. All right? So that becomes our break of structure. Now, where is your last high? Now, our last high is here, because it took this low, took out this inducement to create this high, and this high gave rise to this move down that now broke the structure. So our lower high is confirmed here. Where is it? This is our lower high, okay, confirmed. Now, as price moves back higher, take a look at what happened here, guys. Take a look at what happened. If price now takes out this major structure high here, it therefore means that there is another change of character. And so we are moving from the downtrend to the uptrend. Now, as you can see, that happened here. Okay? So this becomes our chalk again in the market. So we are now bullish again. All right? And therefore, because we are bullish again, you now want to take advantage of the four phases of the market to take trades. All right? This is what I want to show to you now. Now, take a look at this area. Take a look at this traffic here. Now, to some traders, this traffic will scare them. They will say there is no trade here. There's nothing to trade here. No, it is not like that. Once you find this kind of consolidation that looks like a messy traffic, you don't need to be scared. It is opportunity. It is time for you to brace up and get ready to nail the market. All right? So that's your consolidation phase. All right? And like I told you, that consolidation phase, the expansion should come with high volume. All right? High volume. Now, as you can see, take a look at these candles. After this consolidation phase, look at the expansion phase. Look at this candle. All right? This is small, but look at this one again. Look at this one again. This is the kind of momentum you want to find in the market. All right? After the expansion phase. All right? Now, so now that we have seen this expansion phase, we want to wait for our inducement to be taken, and price created this high, came back down, didn't take it out and all that, and price created this high. Look at it. Price created this high. All right? And price came down, took out inducement. Where is your inducement? Well, there are many inducements that you can look at. This is an inducement in the market. Look at it. And now, once inducement is taken, take a look at this consolidation phase. You need to capitalize on this consolidation phase to take the trade in the market. All right? Now, take a look at it. This candle. All right? This candle. This other bearish candle took out the high. And then after that, price started coming back down. Now, this candle took out the low of this previous candle here. Can you see that? When it took out that low, this is your order block. This bearish candle is your OB, your valid OB inside of this consolidation phase. All right? Usually at the middle of the consolidation. All right? Now, this is your actual OB. But if you look at this candle, this third candle is already mitigated. That's already mitigated it. And we want to have fair value gap before we can confirm any candle as a valid OB. All right? And therefore, we now have to shift our OB to this next candle, which is this bullish candle. So that bullish candle now becomes our OB in the market. All right? So we take that as our OB. So that's our OB in the market. And then we can stretch it out. All right? We can stretch it out. So what do you find there? You find price coming to tap into that OB within that your consolidation phase. Now, you could refine this OB on your lower time frame. Now this is 15M. Now we can quickly go to the 1M and refine the OB if you like, if you so desire. So let us just go there and see whether there is any opportunity for us to refine that OB to make it a bit more smaller, so that we can have a better risk to reward. So let's see if there is anything like that there. Okay, so this is where we are now. Let's see. Okay, so this is the OB. We want to find out whether there is any way we can refine it, all right, to give us a better risk to reward. Let's see. Okay, so look at our OB here, all right. Now take a look at this price, all right, came down, and this one went back up, slightly taking out the high of this bullish candle here. Now meaning that this is our order flow. Remember your order flow in the market, very, very important, your order flow. So this becomes your order flow in the market, all right. Why? Because this one is mitigated already here. So this is the one that is not mitigated. So you can mark that order flow, this order flow. You refine your OB, your 15M OB to this order flow here. All right. So this is your order flow. Let's make that color outstanding. Okay, so that's your order flow. All right. So we're expecting price to come and tap into this order flow and go higher, because already we have established on our 15M time frame, all right, that we are bullish. So let's just see what's going on here. Okay, can you see what happened there? Take a look at the precision. Take a look at the precision. Price came straight into this. Now, if you wanted to take this trade, we are going long, all right? You have placed your stop loss, your order there, and then your stop loss just a little above, all right? A little below this, okay? That will be the trade, and then you will target this 1 minute high. Target this 1 minute high as your first take profit, okay? Please remember that this is direct entry. There is no form of confirmation. This is just direct entry. All we have done here is to refine the OB. This is direct entry. So if you're an aggressive trader and you want to trade a direct entry, then you can enter the market like this, all right? We don't have any confirmation that price is going to go higher, okay? So this is direct entry. I just wanted us to know that one. So that will be your first take profit, but the ultimate take profit will be this high. Where is it? It will be this high, this 15 minutes high. Let's get to the 15 minutes high and see the 15 minutes high. Let's get back to the 15 minutes, because that will be your ultimate target. That 15 minutes high will be your ultimate target. Just a minute, guys. My connection is really bad. It's really bad. So, but we have to make do with what we have. Okay? Just make do with what we have. So, this is your 15 minutes high that gave rise to this low here. All right? And therefore, we want to target as our ultimate this high. That's our ultimate take profit. All right? And as you can see, price, let's get back to the 1M, because that's where we took the trade from, so that you can see what I mean. So let's see. Okay, so as you can see, that's our take profit there. All right, and as you can see, price smash on this. Let's see, as you can see, price smashed on that and even went higher, went above our take profit. Can you see that? Cool trade using consolidation. The four phases of the market, you use consolidation specially as a very, very special confluence to support your trade idea. All right, so that's the first example I want to show to you. Let me show you one more example before we call it a day. Okay, now this is the second example. Now take a look at this very area. Can you see how messy this is? Okay, how messy it is. The longer the consolidation, the bigger the move. I want you to understand that. Now take a look. Our consolidation is from here. Let's say from here down to this point. Okay, so that's a consolidation. That's a consolidation. Okay, now look at the move of the market here. Take a look at the move of the market. Look at it. Huge move of the market. Can you see that? All right, that's what you want to see. And then price now went down. Take a look. Price went down, took out inducement here. This is your inducement. Remember that your inducement has to be taken. This becomes your inducement in the market. All right, is that your inducement? Okay, we can use that as a better inducement, but actually your minor inducement is here. Take a look. So whichever one you prefer, your minor inducement is here. Okay, so let's use this as our inducement. This one here. So inducement is taken. And once inducement is taken, what does that tell you? It tells you that the low or high is confirmed. And therefore, our low here is confirmed. Okay? Now that the low is confirmed, an inducement has been taken. Now, remember our consolidation here. We want to look for opportunities to enter the market here. All right? And as you can see, first of all, look at this point. Let's start from here. After inducement has been taken, where can we take this trade from? All right? We want to target where we have consolidation, not any other place. I'm trying to show to you how powerful consolidation is in taking your trades, in confirming your trades. All right? Now, take a look inside this consolidation. The first one is this move here. All right? This candle is our OB. All right? Because this candle came down and went back up again to take out that high of that candle. So this is our OB, our actual OB. I hope you understand. Let me make it bigger for you to see. That's our actual OB. Remember, your valid OB must come with inducement. I mean, with a high probability fair value gap. And take a look at this fair value gap here, from here. All right, to this point. That's your fair value gap. And I've told you that price can react off of your fair value gap. It can react off of your order flow, and it can also react off of your OB. But as you can see, we have a powerful OB here because of this fair value gap. All right, this is your OB. I'm going to change the color because I don't want it to be too messy. Now, let's change that color to something deeper. Okay, so that's your OB, and this is your fair value gap. Let me also make the color of that fair value gap a little brighter. All right, so that's your fair value gap. That's our OB. Okay, price can react off of here or here. All right, I want us to understand that. So let's see what is going to happen in the market. Now, this is your fair value gap. All right, this is your fair value gap, and this is your OB in the market. All right, so price can react off of any of them and drop. Okay, now can we go to the lower time frame and see whether we can refine any of these, any of the two? As you can see, price reacted off of the fair value gap. All right, but let's get to the 1M time frame and even see whether we can refine this to a more manageable size, so that we can get a better risk to reward. Let's see that first of all. I don't know whether price can get there, whether TradingView will allow it. I don't know, but if it doesn't allow, that means that we go back to that 15M and just do with what we have there. Just a minute, guys. I doubt it. I doubt if TradingView, okay, they didn't allow it. So let's get back to the 15M and just make do with what we have there. But I hope you got the idea of what I'm trying to pass across. Okay, okay, so this is where we are. Okay, on the 15M, since TradingView will not allow us to go a bit further, backward. On the 1M, we wanted to refine this OB. Now again, this is direct entry. There is no form of confirmation here. All right, there's no form of confirmation here. So price just tap into this your fair value gap and dropped. Okay, so if you took trade, you wanted to say go short here, would have taken your trade from here. All right, your stop loss just slightly above because of this fair value gap, and then you target the 15M low. And where is the 15M low? Look at the 15M low here. So you would have targeted this 15M low. All right, because this is your low. This is where you should be targeting. Okay, and so we are expecting price at the end of the day to get to that 15 minutes low. Has it not gotten there? Let's even see. I think price tapped into it. Let's see. Let's see. Did it smash our take? It smashed our take profit. Can you see that? It smashed our take profit. But if TradingView had allowed us to go to 1 minute time frame, then we would have had a better bargain with our stop loss. All right, but this gives us about 5 point something R. All right, this alone gives us about 5 point something R. If TradingView had allowed us to go to the 1 minute time frame to refine this OB, I can assure you that you will get something like 10-15 R. All right, so that is the way you use consolidation to your advantage. All right, remember the 4 phases in the market. You need to understand consolidation, expansion, retracement, and reversal. You got to learn about this, and then your trading will change forever. All right, guys, I hope you had value in this video. If you did, please subscribe to our YouTube channel and hit the notification bell so that anytime we come out with a new video, you'll be the first to be notified. And if you haven't joined our free Telegram channel, please do that just immediately. I'm going to leave the link in the description. And if you want to be part of our VIP community to understand what we are actually doing and become a professional within 60 days or less, then you can take advantage of the promo that we are running right now. We are giving 25% off for anybody who will sign up in the next 7 days. You can become part of it. All right? Okay, guys. I see you in our next educational video.